What is going on, everybody? And in this video, we're providing a state of the market and stock picks for January 10th, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. That is 2023. So, nice little pop today. Something we would definitely want to be looking at coming into tomorrow. Something I really like. Now, typically, this play does work out really well after a break like this in a retest. That means we're going to potentially pop tomorrow. Tomorrow could be a pretty big day to the upside. Again, really watching that 4K mark tomorrow. One thing to consider is going into tomorrow is that we have Powell. Powell will be essentially, he's going to have his conference at 9 a.m. So before actually market open tomorrow, we're going to have his thoughts and ideas. Again, I don't know if this is going to be essentially just a statement. Again, if it's any kind of just a statement, a pre-recorded video or anything like that, it does say a speech. So I might be thinking that the speech is just essentially um, already rehearsed statements. So my opinion, unless he is fielding questions, it's not really going to do a lot unless there's something different in that speech that he hasn't already disclosed. Which typically, anytime there's any kind of written statement, he doesn't disclose anything that's new. So that's something to keep in mind. But again, if he's fielding questions, people will ask him specific questions about rate increases and inflation. And so when he starts answering those, that's when it actually starts moving markets. So again, that's going to be very critical into tomorrow. And then again, we have the core CPI on Thursday morning pre-market, and then we have banks pre-market on Friday. We do have TCM on Thursday as well, which is kind of give guidance onto how chips are going to end up playing out. Chips had a big push today. So just keep that in mind. And then you have any potential forward guidance that could be coming out with Apple. Apple could disclose some forward guidance here in the next coming days that could potentially sink the market too. So there's a lot of things you have to be careful of. And this is why I said there's a lot of misdirection, and you have to have good risk management, because even though we've popped today, doesn't mean we're going to continue going up. We need things to play out. We need inflation to come down. We need banks to do good on earnings, but not just banks. That's just the first step. Then we're going to need big tech to do well as well. And then on that same token, going to realize that we're just a couple weeks out from the new monetary policy for the new year. When that is disclosed, we will get a gauge on that. And I think any kind of pump that we do get is going to be short-lived. Again, people are trying to time this pivot. The pivot will come this year, in my opinion. Again, it's going to happen before Fed actually decrease rates. But with that being said, also understand that there is this big catalyst that I've been talking about that is brewing with these high interest rates and people getting laid off, and potentially something bigger breaking and some new black swan events that will hit the headline news that will cause panic. So that's what I'm kind of concerned about, and what I'm foreseeing sometime maybe at the end of Q1 or sometime in Q2 potentially happening. So we shall see. We wait and we see, but we play day to day. This is why I do daily updates to try to capture daily moves, and then trying to have kind of just a couple month gauge on where we could potentially be going. Again, there's a lot of what if scenarios, but again, I do believe there will be a pivot in the market. It's just being patient enough to let the remainder of these rate increases happen, and then hopefully not break anything in that term. So, and then we have to see again the jobs. Even though it's weighing a lot more on the market, it's still very misleading. There's still a lot of people on severance packages. Again, understanding that these people that are on severance packages are more higher caliber jobs, and not a lot of recreation and travel has opened up a lot of jobs. So that is essentially what's been kind of helping the job market and the numbers there. But ultimately, I understand again that the higher caliber jobs are the ones that are being lost. And so, with that being said, it's going to be a very good week in my opinion. I think I do like the fact that we're sticking and we're moving better. We're not essentially just wicking. Like I said before, we were doing that all last year. We did have some of that coming into this year, and then we're getting bigger moves and just one solid move for the day, one solid move up. That's a lot better to see. It's a lot easier to trade as opposed to this push and wick. That makes it very hard to trade. So, nonetheless, this year is starting off good so far. We shall see what happens here. But again, I think we could potentially have a nice pop as long as Powell plays into everything. We could have a nice potential pop into the 4K mark going into Thursday. If core does well, that could give us enough juice to potentially pop over a lot of these 200 EMA daily, this 20 EMA weekly, and 20 EMA monthly. Could potentially break us out. But then again, you're going to have the banks do well. And then all that can essentially just be reset by bad earnings for them being one, and then that black swan catalyst. Just because we break out, many times we've attempted to break out and we fail and fall back into the wedge. So don't think just because we barely break out. We've been playing that pattern essentially all last year, where you'd break out, it looked like we were getting ready to run, and then we just fall right back into the pattern and we continue selling off. Again, things need to get better to have a true pivot. Again, the stock market will pivot before the rest of the economy will. But again, we need that stuff to unfold first. So, with that being said, again, tomorrow, looking if we start getting some gas, if everything works out with Powell, again, watching again that 4K mark, you need a hard rejection off that. Not only do you have again the 200 EMA daily here, but you also have the trend line you're battling against. So I'm expecting if we do make it up here, it'll be a hard rejection nonetheless. But that could potentially give us 2 days of going up as long as Powell complies. Then it gives us core, and it gives us again bank earnings. If they don't both do bad, could be a higher low, and then we could get rejected and start selling off again. But this being a very big support, again, you've had almost a whole month of support here, sitting right here. So again, if this does come back down here and looks, it's going to bounce pretty hard off this thing. It's not saying it's going to stay, but again, if depending what is fueling the downside push, if that does happen, that might alleviate any potential of this actually being a support and just blow right through that. So, as we've seen in the past, that if anything does happen, as far as a new catalyst, I think could really potentially sell us off. So with that being said, let's look at the technicals. Technical wise, again, we are really watching roughly a 4K mark, and hopefully the market holds around that 3,900 mark. Again, you don't want this to drop below essentially that 3,890. You don't want this breaking back below the 20 and the 50 EMA here on the daily. If it does, we're going to revisit the 3,800 if that happens. So nonetheless, that's what SPX looks like. The dollar in itself, again, bulls, you want it to break this 102 for us to start running. Bears, you want this to push back up over 105. Again, I think that's really going to determine on what core looks like, really going to determine what the banks look like on Friday. We got a lot of data sets at the back end of the week that could potentially help us break out of this slump. But again, it really just depends on what comes of that. If we do get a wild card in the core on Thursday, essentially the market breaking back over 702, high sevens, even in the eights, would be highly concerning and would reset the clock on everything and potentially put a lot of fear in the market at that point. So we definitely don't want that. But I'll see where it goes there for Bitcoin. Bitcoin starting to creep back up. Got a nice little wedge creating here. Again, everything needs to fall in line, but things are starting to look good here. Could potentially start breaking out, but we have to see. Again, things have to fall in line. Just because it's breaking out doesn't mean it'll actually start running. We need things to play out, or else going to be correcting again here pretty soon. Tesla still struggling with the 122, but if things work out, maybe the turning point for tech. But we really have to see again. Again, the bottom holding that 103 needs to continue to hold that. If it does break that, you got a pretty nasty drop if Tesla can't make it past there. So we will see. Apple in itself, again, hard rejection off the 132. Again, you had this massive gap, something we're talking about in the weekly update. Got that rejection off there. This thing could start selling off again. As long as it doesn't break the 124, we should be okay. But if tech, and you definitely want tech to hold up as long as value and financials hold up. That's why I go over all the different industries when I do these videos, because it's important to watch to see what happens, because it makes a difference. And considering that value and financials have been very overextended and continue to be what holds up the market, it's going to be concerning if inflation one jumps or banks do really poorly. Again, my thought process is inflation will continue to come down, but banks will do really bad. And then on that same token, what it's going to do is cause a sell off and cause us to chop more, not so much sell to new lows. But will stop us from definitely trying to break out of the current the trend that we're trying to break out of, this heavy trend line we've been fighting against for past years. So I'm definitely gonna have to see how that works. But BA again, very very overextended. At some point, this thing's gonna come down. It's not gonna look pretty, but right now, it's what's leading the way. It's pretty much been people's safe haven since tech has been struggling. So you definitely want to watch this. Again, new high is 112. If you're trying to FOMO in this now, that's definitely a bad idea. Looking for a retest, actually, this back at the 196 would be good to continue up. But if you can't do that, it could be a cause of concern in general. So I need to be watching that there. JPM. So JPM, again, it's holding roughly around that 139. Again, the bottom range being the 129. So got a 10 point, which is pretty big for JP Morgan. But again, they report on Friday. That's going to be what's interesting. I wouldn't be surprised if we continue to hold this range for banks. As long as banks hold, that should be okay. Value looks like it wants to keep pumping. Banks are trying to break out here again. VAC trying to break out, but we'll see. As long as banks continue to hold, value pushes and tech picks up, we could get the general index to pick back up, is kind of what we're looking for. Again, if it could all be wiped out tomorrow with Powell and what he says, again, we don't want him fielding questions. It is a speech, so he may just come out and say something, a written statement, and pretty much be done. Again, if he can go written, he will go written and avoid questions, as himself knows that he can move markets. So he deters from that. And by all means, we don't need him speaking unless it's for monetary policy, unless once things glaze over and calm down. But aside from that, right now, we don't want him fielding questions unless it's around monetary policy. Potentially get some sort of rally out of this. But again, all the ducks need to align for that to happen. Again, inflation is not something of my concern right now. It is where the consumer is at, and see if the consumer buckles, because that will cause even bigger problems and another black swan that could potentially sink us down. Otherwise, we might be okay. Just really depends on where the consumer's at. So we'll watch and we'll see what unfolds in the next couple days. So if you made this far, I do appreciate you. Go ahead and drop a like button. Until next time, I will see you guys later.